With Stifel, Nicholas. Good morning. Thanks for checking in.
Good morning, McGraw.
All right, down 100 yesterday. What happened?
Exactly, almost exactly, down 101, closing at 24,987. The focus was on tariffs. We were down about 200 earlier in the day, came back to close down about 100 at the end of the day. And it's just basically the political noise taking place between the threats over the weekend with $50 billion of tariffs to China and China's $50 billion on $50 billion of goods tariffs back to the U.S.
All right, we'll get to that more tariffs in a second. What's the Russell 2000?
Russell 2000 is the small cap index for the United States. So Russell is a company that basically originated a lot of indexes. Russell 3000 is basically the whole U.S. market. The 1000 is the large, mid-large, and large U.S. companies. The Russell 2000 is the small U.S. companies. The Russell 2000, with the market being down, the Dow being down 101, the Russell 2000 hit its all-time high yesterday. The Russell 2000 is up 10% year to date. So when we talk about clients diversifying, we want to make sure it's not just all Standard & Poor's 500 or Dow Jones stocks or large stocks. Here you have a big section of U.S. stocks hitting all-time highs yesterday, and it's up 10% year to date.
And the Russell 2000 is it's a bunch of small cap companies. Is that right?
Small cap. It's the index. It's just the index. So whether you pick small cap mutual funds or the index, the Russell 2000 index, it's small U.S. companies. Now, publicly traded small companies. So
right.
Let's put this in perspective. Many of these companies are $500 million cap companies to, $4 or $5 billion companies. But we're not the Pepsis, the Cokes, the IBMs, the Apples, the Googles, all that.
Right. This isn't a guy making chairs in his backyard that has a small business. These are
think of companies
right.
That toss out names, companies like a Wayfair or a Stamps.com or stuff like that.
Right. Big, giant, small companies, if that makes any sense. Right. Yeah.
Exactly.
That's a really interesting that hit an all-time high yesterday. That'll be interesting to watch over the next couple of weeks and months.
They are benefiting so much from the tax reform. The Tax Reform Act, reducing top corporate rate to 21%. These are companies that derive 80, 90, 100% of their business in the U.S. So they have a huge benefit. You take a company like Coke, has 80% of their profits from international. They didn't get a break on their international tax. They got a break on that 20% of U.S. tax.
Interesting.
So these companies are really impacted in a very positive way by the tax reform.
All right. With that being said, more additional tariffs are being threatened. What's this story now?
Well, after the tit for tat over the weekend and yesterday morning, last night, President Trump threatened China with additional 10% tariff on another $200 billion worth of goods, trade goods. And so, the first thing was 25% tariff on the specified $50 billion. Now it's a 10% tariff on additional 200. So it's the trade war. It's the old-fashioned spitting contest or mud throwing contest. When I was a kid, it used to be fun to throw mud at each other, but we all got in trouble when we went home.
Yeah. Well, we'll see what happens with this current trade war. All right. Markets today. How are they going to react to the threats of more tariffs?
The market does not like uncertainty and risk. And basically, these more tariffs is additional risk. So initially, it looks like the market's going to be down about 350 to 380 points on the get-go based on the overnight news. We'll see how the day plays out, but that'll be the start.
Dwayne Thomas, Senior Vice President of Investments and Branch Manager of the Clayton branch of Stifel, Nicholas. We'll talk to you tomorrow. Thanks.
Sounds great. Talk